While the entire world is obsessed with battery charging times and range anxiety, a completely different war for the future of mobility is being fought in the shadows. The global hydrogen vehicle market is in a freefall, down a staggering 27.2% this year alone. Yet somehow, Hyundai is not just surviving, it's dominating, capturing over 30% of the entire market. How are they pulling this off while their own sales are also down? Is their new $8.17 billion bet on hydrogen a visionary move that will leave competitors in the dust? Or is it one of the most expensive mistakes in automotive history? We're diving deep into Hyundai's audacious hydrogen strategy and what it means for the future of your car. If you're fascinated by the tech that will power our future, you're in the right place. Make sure you're subscribed to Electric Vehicle Empire so you don't miss what's coming next. All right, let's get straight to the brutal numbers because they paint a fascinating, almost contradictory picture. According to the latest data from SNE Research for the first half of 2025, the global hydrogen fuel cell vehicle FCEV market is not just slow, it's shrinking fast. Only 4,102 hydrogen cars were sold worldwide. That's a 27.2% drop from the same time last year. This isn't a new trend either. The market peaked in 2022 and has been on a downward slide for 3 consecutive years. Now, here's the twist. In this shrinking pond, one company is the undisputed big fish, Hyundai Motor Company. They sold 1,252 FCEVs, primarily the Nexo SUV and their hydrogen-powered buses. That gives them a commanding 30.5% of the global market. The closest rival, Toyota, managed to sell just 698 units. But, and this is a big but, Hyundai's own sales fell by 31.9%. So let's be clear, they are losing sales slightly faster than the overall market. But because they started from such a position of strength, they've managed to hold on to that number one spot. It's like being the tallest person in a room where the ceiling is getting lower. You're still the tallest, but you're feeling the pressure. So what is going on here? To understand Hyundai's strategy, we need to look beyond these headline numbers and break down their three-pronged attack: mastering the technology, betting billions on the ecosystem, and preparing for a future where batteries might not be the answer for everything. Part 1. The Hydrogen Arsenal. First, let's talk about the hardware. Hyundai isn't just selling one token hydrogen car, they're building a portfolio. The star of the show for consumers is the Hyundai Nexo. First launched in 2018, it was one of the first dedicated hydrogen SUVs on the market. For 2025, it's received its first major redesign. The big news is a new, impressive range of 720 kilometers, or about 450 miles, on a single tank of hydrogen. For comparison, that's on par or even better than many top-tier battery electric vehicles, BEVs. And here's the kicker. A full refuel takes about 5 minutes. That's the core promise of hydrogen. The range and refueling experience of a gasoline car, but with zero emissions. But the Nexo is only half the story, and arguably the less important half for Hyundai's long-term vision. The real action is in the commercial sector. Look at the market data again. The single biggest market for hydrogen vehicles right now is China, with a massive 59.7% share. And what are they buying? Not passenger SUVs. They're buying commercial vehicles, buses, and trucks. This is where hydrogen's advantages truly shine. Think about it. A fully electric semi-truck would need a battery so colossal it would be absurdly heavy, eat into cargo capacity, and take hours to recharge. That's a logistical nightmare for a business that makes money by keeping its wheels turning. And this is where Hyundai Universe Hydrogen Electric Bus comes in. In August, they launched an upgraded model with a class-leading range of 960.4 kilometers. That's nearly 600 miles. This vehicle can run long-haul routes all day, refuel in minutes, and get back on the road. They've also packed it with modern features like a standard tire pressure monitoring system, making it a compelling, practical choice for fleet operators. Hyundai's strategy is clear. The Nexo is the public face, the technology showcase. But the buses and their future hydrogen trucks are the workhorses intended to generate real volume and profit, dominating a sector where BEVs currently struggle. Part 2. The $8.17 billion gamble. Having the best tech is useless if no one can use it. Hyundai knows this. The hydrogen market is crippled by what they call the triple bottleneck, a severe lack of refueling stations, major supply chain constraints for producing and transporting hydrogen, and a shortage of skilled labor to build and service these vehicles. You can build the greatest FCEV in the world, but if the nearest refueling station is 500 miles away, you've built a museum piece. This is why Hyundai Motor Company's recent corporate moves are so critical. In March, they officially added hydrogen business and related activities to their corporate charter. This isn't just semantics, it's a signal to investors and the world that hydrogen is a core pillar of their future, right alongside EVs. And they're backing it up with cash, a lot of it. The company has earmarked an incredible 11 trillion, or about 8.17 trillion, by 2030. This money isn't just for designing new cars, it's for tackling that triple bottleneck head-on. They're investing in fuel cell production technology, building infrastructure partnerships, and funding the development of a robust hydrogen ecosystem. A perfect example is their partnership at the Wanju Hydrogen Specialized Complex in Korea. They're teaming up with local government, the Korea Hydrogen Association, and a national university. The goal is to create a hub that advances everything from material science to manufacturing techniques for hydrogen commercial vehicles. They aren't waiting for the infrastructure to appear. They are actively spending billions to build it themselves. As Hyundai Motor President Jose Munoz said, their vision is for sustainable mobility that encompasses not only electric vehicles, but also hybrid and hydrogen fuel cell vehicles. This isn't an either-or battle for Hyundai. It's an all-of-the-above strategy.
Part 3. The Coming Hydrogen Wars. So, if Hyundai is betting so heavily on hydrogen, where is everyone else? The competition is quiet, but they're not asleep. Toyota remains a true believer. Their Mirai sedan is a direct competitor to the Nexo and a technological marvel in its own right. Toyota shares the vision of hydrogen as a key to decarbonizing heavy industry and transport. Then you have the Europeans. BMW has been testing a pilot fleet of its iX5 hydrogen SUV, demonstrating that they have the technology ready to go if the market and infrastructure materialize. Stellantis is already producing hydrogen-powered commercial vans for select business customers in Europe. And we can't forget China. While they rely on domestic manufacturers like SAIC and Foton for their commercial fleet, their massive government-backed push into hydrogen creates the world's largest laboratory for the technology. What they learn and scale up could eventually flood the global market. The big question everyone is asking is, BEV versus FCEV, which one wins? But after looking at Hyundai's strategy, I think that's the wrong question. The future is likely not a single winner, but a split decision. BEVs are proving to be the perfect solution for the vast majority of personal transportation. Most people drive less than 40 miles a day. They can charge conveniently and cheaply at home overnight. For the daily commute, the school run, and trips to the grocery store, the BEV revolution is undeniable and unstoppable. But for everything else? For the semi-trucks that cross the country, for the city buses that run 20 hours a day, for heavy construction equipment, for shipping and aviation, the weight and charging time of batteries become a fundamental physics problem. This is the multi-billion-dollar niche Hyundai is aiming to conquer. They are ceding the everyday passenger car battle to their own excellent Ioniq lineup of BEVs, while simultaneously positioning themselves to be the undisputed king of hydrogen-powered industrial and commercial mobility. So, is Hyundai's hydrogen dominance in a shrinking market a sign of failure? I don't think so. I think it's a sign of a calculated strategic retreat from a battle they don't need to win, in order to redeploy their forces for a war that hasn't even started yet. They are absorbing short-term sales drops while investing billions to own the infrastructure, the technology, and the supply chain for the future of heavy transport. It's a high-risk, high-reward play. If green hydrogen production becomes cheap and plentiful, and if infrastructure builds out as planned, Hyundai will be positioned a decade ahead of its rivals. If it fails, it will be a case study of corporate hubris for decades to come. But one thing is certain, the race for a zero-emissions future is far from over, and the quiet hum of the hydrogen fuel cell might just get a lot louder. What do you think? Is Hyundai's $8 billion gamble pure genius or a monumental failure in the making? Let me know your thoughts down in the comments. Thanks for watching, and we'll see you on the next episode of Electric Vehicle Empire.